It's 5 a.m. in New York City, 9 a.m. in London. Good morning. I'm Julie Fine in for Vonnie Quinn with your Bloomberg Brief. Let's get you started for the day. Stock recovery losing steam. Equity futures waver and oil slides after a dizzying start to the week. That as President Trump floats removing oil-related sanctions and predicts that the Iran war would resolve very soon. And Gulf nations agree to deeper oil production cuts as the Strait of Hormuz remains almost at a standstill. For a check on the markets, here's Christina Aquino.
All right, thanks, Julie. It is green on the screen at the moment, as you can see, across the board rally for U.S. equity futures. The S&P 500 up 0.2%. NASDAQ futures up 0.3%. A lot of those tech names have been under pressure over the last week, rallying today. Russell futures also up today about 0.1%. Let's take a look at the bond market as well, going the other way. Yields are now down as the inflation pressures from the Iran war easing a little bit after that climb down from President Trump overnight. Two-year yields just down about 1 basis point here across the board, really, for the 10-year and 30-year yield as well. Let's take a look at the energy complex as well. We're also seeing a climb down there as some signs of de-escalation emerge from the Iran conflict. Crude across the board lower here, down about $6 or so for Brent, trading around $92 per barrel. Remember, that got over $100 yesterday. And as a result, the Bloomberg US dollar index down a little bit here, 0.2%.
Christina Aquino, thank you. And for some stocks to watch, here's Omar.
Good morning, Julie. Let's start with TSMC and SanDisk. Now, these are two sides of pretty much the same coin here. TSMC reported some numbers, and it's about 30% higher when it comes to sales over the past 2 months of the year. So that's January and February before the events that happened in the Middle East. Now, SanDisk is one of those stocks that are benefiting on that news. TSMC provides chips to the likes of NVIDIA, AMD, and Broadcom. And so that is quite positive news for the hardware story that's already seen some gains this year, discounting the past couple of days on Mideast tensions. But we move on, we flip the board to another industry, and I've gone by for a while without speaking about Bitcoin, but Strategy Inc. is this company that is benefiting from the gains that we've seen in Bitcoin, which is above $70,000 today. It's actually doubled down on Bitcoin, buying about over $1 billion in Bitcoin yesterday. So the stock is, that is reflected in the stock. Investors are looking favorably at that, up 2.7%. And then finally, on the back of the Mideast tensions, we look at some of the oil majors. Yesterday was a good day for them. Today, all of them are going down in the pre-market trade, and that is on the back of Brent pulling back from the gains we've seen yesterday, about $93 a barrel now on what is happening in the Middle East and President Donald Trump's comments on easing the war. Julie, back to you.
Thanks, Abir. And coming up in this hour, former Israeli Prime Minister Naftali Bennett joins us for a conversation on the war. Later in the hour, we'll discuss the implications of the supply shock coming from the Middle East with Wei Li of BlackRock. But first, President Trump hints at a possible end to the war with Iran.
On Iran, you called it an excursion. You said it would be over soon. Are you thinking this week it will be over?
No,
Are you talking
but soon.
about days?
I think soon.
Okay, and with respect
Very soon. Look, everything they have is gone, including their leadership. In fact, there are two levels of leadership, and even actually, as it turns out, more than that. But two levels of leadership are gone.
Oil continuing to fall from Monday's high as the Gulf countries deepen their oil output cuts, with the Strait of Hormuz still near shut. Let's go to team coverage with Bloomberg EMEA News Director Will Kennedy, Sam Dagger in Dubai, and Mika Solner of Bloomberg Government in Washington. Will, I want to start with you. Give us the latest on these production cuts.
Good morning, Julie. What these production cuts show is that despite the president's words, at the moment, with no end to the war and the Straits of Hormuz still effectively closed, the costs for the oil market and the oil industry continue to mount. They represent about 6% of global oil production, which is currently shut in, and that's happening because tankers can't load, tankers can't get out of the Strait of Hormuz, and so that oil has nowhere to go and has to stay in the ground. So the market is more optimistic about the outlook after Trump's words last night, but until those ships start moving, the implications, the impact for the oil industry, for the oil market will continue to build.
Well, I'm curious, President Trump has also floated waiving some oil-related sanctions. So what kind of impact are you looking at there? What can we expect?
So this would focus both on Russia and perhaps even Iran down the line. Those two countries are under sanctions. Their oil output is sanctioned. But in truth, most of their oil has still been getting to global markets because over the last few years they found buyers principally in India and China. So it will help ease the flow of oil out of the Middle East, out of Russia, if it comes into pass. But it will be marginal on the impact of global oil supply. It won't be a game changer for the global oil price.
Nika, I want to bring you in here. What other measures are the White House considering?
Yeah, I think that White House officials are still in deep talks about what exactly they can do to try and ensure that these prices don't rise. But I can say for one thing, I mean, there is an alignment right now in terms of how this is going to impact the president's standing ahead of November. And they're very, very cognizant, as we just heard the president speak, about oil prices. And I think that they understand that increased foreign intervention can ruffle those feathers. I know that it was steady after Venezuela, but I think that they're very closely monitoring the situation.
And Sam, can you give us the latest out of Iran this morning with all the changes?
Absolutely. Good morning. I mean, obviously, a lot more confrontation and defiance from Iran. We heard this morning, according to Iranian state media, the spokesperson for the Islamic Revolutionary Guard Corps saying that as long as this war continues and the attacks on Iran continue, not a single liter of oil will be allowed to be exported from the region. Those were his words. And obviously, yesterday we had the naming of the new supreme leader, and we've had reactions from the leadership in Iran itself. Ali Larijani, who is one of the most powerful figures in the regime, coming out and saying that, the selection of the new supreme leader, Mujtaba Khamenei, the son of the late Ali Khamenei, who was killed on the first day of war, is proof that that we're still here, and that America and Israel tried to put us, according to his words, in a dead end, but we've bounced back. And he's basically also had more defined comments directed at President Trump, saying that Americans must know that they will have to pay a price for what they did. We also had the foreign minister of Iran, Abbas Araghchi, addressing Gulf states, saying that you actually should not be complaining because he said your territories are being used to attack us. And this morning here in the Gulf, we have the Ministry of Defense of the UAE announcing that it has intercepted more Iranian missiles and drones being fired at the UAE. The same in Saudi Arabia. It said intercepted missiles and drones being fired at the eastern province and around an air base outside of Riyadh. And we had the Ministry of Interior in Bahrain saying a woman was killed overnight in an attack on a civilian part of the capital, Manama.
Thanks to Bloomberg's Will Kennedy, Sam Dagger, and Mika Solner of Bloomberg Government. And the war with Iran sparking concerns around supply chains. Bloomberg spoke to the Volkswagen CFO earlier today as the car maker released its earnings.
It's obviously concerning for our partners in the region, or our customers and their families. In terms of business, I must say so far the effects are limited. In terms of energy supply, of gas and oil, we normally work with long-term contracts, so the effect is limited there. And so far, we also see no major supply constraints.
Joining us now is Bloomberg's Oliver Crook, who conducted that interview. What do you think the effect the Iran war is having on the supply chains?
So I think this is one of the big questions that we've had and we've been trying to get our arms around ever since the war started here in Europe is what is the effect going to be on European companies, on supply chains, particularly industrial companies, as well as on inflation in the continent. I caught up with some of the ECB Governing Council members last week, and basically they said they didn't really know, that they really couldn't get their arms around the story and what the impact would be on inflation. So it was good to have an opportunity to speak to one of the largest industrial companies here in Europe. And you heard it there from the Chief Financial Officer of Volkswagen, Arno Antlitz, saying that basically because of how they've structured their situation with energy, they have long-term supplies, long-term contracts, that the shock and the increase that we've seen in gas prices is not going to have an immediate effect on their P&L and on their earnings. That being said, those are some of the upstream sort of concerns, the input costs for Volkswagen. There's also questions about commodities, being able to get, for example, that aluminum supply, get the actual deliveries of the cars, much of which are shipped on cargoes on ships across the open seas, which obviously are constrained by the situation in Iran. But for the time being, they say that the constraint, that they are not being terribly affected about it. That being said, if this were to be prolonged, he is concerned about the fact that this input cost could go up for all of their suppliers. Their suppliers could raise prices. And of course, there's the question of consumer sentiment. If there's higher inflation in Europe, higher concern in Europe, are you really going to go out and buy a car?
I'm also curious what else stuck out to you about the earnings.
Yeah, if you want to look at the earnings from Volkswagen, if you're looking for green shoots and a sort of positive story on the German industrial story, you did not find it in Volkswagen earnings for 2025. They gave their full year results. We should say that the operating profit for Volkswagen, it was the lowest it has been since 2016. That was the throes of Dieselgate. Same thing on margins. We saw the margin come down to 2.8% for selling cars throughout the year of 2025. Again, that's the lowest since 2015, I should say, in the throes of Dieselgate. That being said, they took a lot of one-off write-downs in terms of EVs and sort of pivoting their strategy, so that should not be represented in the year to come. That being said, a couple other stats for you. They only sold 266 Porsches last year, and the margin that they had on Porsche was 0.3%. That means that they basically made no money selling Porsches. The year before, the margins were 14.5%. That sort of illustrates the difficulty that Volkswagen is experiencing, not just in the American market because of tariffs, but also in the Chinese markets, where we had a sales decline of 6% last year. That puts the question of cost cuts squarely in focus, and that's what I asked the CFO of Volkswagen. Where is he going to find those cost cuts? Have a listen.
We have to prepare for a more intense competition, so we have to continue to work on the cost side, reduce costs, reduce complexity, and draw even more group synergies. And this is exactly what we concentrate on in the next month.
So cost cuts are squarely in focus for Volkswagen. Just a final word. The only sort of market, one of the main markets we saw actual growth last year was in Europe at 5% growth. That being said, in the next couple of months, you're going to have BYD, the EV maker from China, making cars within the European Union, within the tariff barrier for the first time. So competition is going to heat up here. And one final point, and this I found really very interesting, is when Volkswagen and the ways in which they're trying to find growth, we understand that they're going to be teaming up with defense companies. So Volkswagen could be making vehicles for the battlefield, which is part of one of the industries that's really outperforming here in Germany.
Interesting interview thanks to Bloomberg's Oliver Crook. And now on to the other top stories trending on the terminal this morning. The war in Iran hit some of the world's biggest hedge funds. Millennium and Point72 lost hundreds of millions of dollars last week due to the broad sell-off. Millennium lost $1.5 billion. Bellasani declined by 3.5%. Point72 lost 1.1%. A top Pentagon official sees little chance of reviving the Anthropic AI deal. Defense Undersecretary Emil Michael told Bloomberg that Anthropic's lawsuit challenging the government's decision to declare the company a supply chain risk was an expected reaction, but it wouldn't alter the Pentagon's decision. TSMC sales grew 30% in the first 2 months of the year, buoyed by the pace of AI infrastructure construction. Revenue in January and February rose to about $22.6 billion. The go-to chip maker for NVIDIA, AMD, and Broadcom serves as a barometer for the global AI industry. And coming up, former Israeli Prime Minister Naftali Bennett joins us. This is Bloomberg. This is Bloomberg Brief. I'm Julie Fine in New York. Let's head over to the Middle East. Bloomberg's Jumana Bersachi with the former Israeli Prime Minister Naftali Bennett. Jumana.
Thank you, Julie. Yes, good afternoon, good morning, everybody. And thank you for joining our show. I'm going to start with the news of the day. President Trump indicating that he may want to end the war, quote, very, very soon. What does that mean for Israel's military objectives? Should the U.S. decide to end the war in the coming days, how would Israel respond?
Well, President Trump has been clear about the goals of this war. The primary goals are to dismantle Iran's nuclear capabilities and ballistic missile capabilities, and create an opportunity for the Iranian people to change their own life and fight for freedom. Can you hear me?
Are we seeing divergent? I can hear you. I just want to reiterate this point. Are we seeing divergent objectives between what the U.S. want to achieve and what Israel want to achieve from these military operations?
No, it's the same goal. The goal is to turn Iran from a nuclear and ballistic missile threat into just a regular country that stops threatening its neighbors. Both the United States and the Israeli Air Force have worked over the past 10 days to sort of clip off those capabilities, but we need to ensure that it's a permanent change and that Iran doesn't go back and nuclearize itself.
And how long, in your own assessment, is that going to take? Are we talking days, or are we talking weeks, or are we talking months here?
As long as it's necessary. Look, the Israeli people are paying much of the price because we're the ones who are being hit by missiles and rockets and in shelters. But we understand that if we didn't act now, then 2 years from now, we'd have a monster so strong that we wouldn't be able to act anymore. So we have the perseverance to see this through.
Iran's messaging has been one of defiance. The nomination of the new supreme leader, who's the son of the late supreme leader, they've hit back, not just at Israel, but at Gulf states as well. We're seeing mounting economic costs, a lot of damage and disruption to global energy markets. Did you underestimate the ability of the Iranian regime to hit back?
Quite the contrary. It actually proves precisely the point. Iran's regime is a formidable regime that's been working on this for 47 years. This war didn't start 10 days ago. It started 47 years ago when Iran declared America the big Satan and Israel the small Satan and started its industry of death and destruction. So it's taking time, 47 years to dismantle. Takes a few more days or weeks as much as is necessary.
Do you see this as the final war that Israel is going to engage in with Iran? Because, of course, there was the 12-day war last June, and here we are in another situation where there's another attempt to, quote unquote, finish off the job, as many of your peers have said. Do you see this as the last war?
Well, we would very much hope that the outcome of this war is that Iran's regime decides that they're not going to continue enriching uranium, that they're not going to continue producing more and more ballistic missiles. But one way or another, we will always need to defend ourselves against looming threats.
And you've spoken in the past about what a weaker regime would mean in terms of empowering everyday Iranian people. There are no signs yet that Iranian people are once again taking to the streets. Do you think that that can actually happen in the absence of ground troops being committed to Iran?
Look, we cannot tell the Iranian people what to do. We can create the environment that would allow them to uprise. We are weakening the seams of this regime. We're weakening the apparatus. It's growing weaker and weaker, and there won't be a more opportune moment than now. But ultimately, it's their decision, not ours.
You've spoken about striking the head of the octopus, and indeed, we saw that in the early days of the operation, some key personnel at the top, right at the top, taken out. But as we know, there are several layers to the regime's power structure. What would it take to dismantle them?
Well, the head of the octopus is the entire Iranian regime, and if it falls, then all its tentacles will just dry out. It means that Hezbollah won't get the $1 billion a year and will dry out. Hamas, Islamic Jihad, the Houthis, the Iraqi arm of Iran. So if you cut the head of the octopus off, you solve 70-80% of the problems in the Middle East. That's why this campaign is just so important. I've been pushing for this for about a decade now, that we shouldn't be fighting the tentacles. We should go to the head of the octopus, and now we're doing it. And it's the most important and effective, potentially effective campaign that could be.
You're saying that you've been, advocating this for many years now, but are you going to be the politician who reaps the rewards from this, or is it going to be the current Israeli Prime Minister Netanyahu, obviously heading into crucial elections later this year?
This is not at all about politics, and you're right that Netanyahu is my opponent. I'm his opponent, and I think that I should become the next Prime Minister of Israel. However, on this issue, there is no daylight between Netanyahu and myself, no daylight within Israel, and no daylight between Israel and the United States. We stand together to dismantle the world's biggest nuclear threat, which is Iran.
Let me ask you about one of those tentacles that you just mentioned, Hezbollah. And because there's a new front that's opened up in Lebanon, what would be an acceptable outcome for Israel? Would it be enough for Hezbollah to disarm, which is what the Lebanese government are now publicly advocating for, to put down their arms but remain a political party? Or would that not still be an acceptable outcome for Israel?
As you said, disarmed Hezbollah, from our perspective, if there's no military component there, and they cannot threaten our people in the north, that's what we want. We don't care about the internal Lebanese politics. We do insist that we don't have a monster as a neighbor.
Okay, I'm gonna round up with one question, which I think is very crucial as well. Given the missile interception over Turkey, you in the past have referred to Turkey and said, we should not turn a blind eye to them, suggesting they may be more aligning more closely to regional axis, including Iran. But obviously the tables have turned in the last 24 hours, with Turkey also having to intercept some of the missiles that have been directed towards them. Let me just ask you whether there's a risk of further confrontation with Turkey based on comments that you've said in the past.
Well, we need to ensure that Erdogan doesn't create a new alliance of radical Islam Sunni version, meaning an axis between himself, Julani, Qatar, and Hamas. We've been facing for many decades the Shiite radical Islam, and I hope that Turkey doesn't choose to foment terror and Islamism in its power. It's up to Turkey ultimately. If they seek peace, we definitely want peace. But if they try and surround us with terror, we will not sit idle.
Thank you, former Israeli Prime Minister Naftali Bennett. We appreciate your time.
It's 5:30 a.m. in New York City and 9:30 a.m. in London. Good morning. I'm Julie Fine in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks rise and oil slides after a dizzying start to the week. That as President Trump floats removing oil-related sanctions and predicts that the Iran war would resolve very soon. And Gulf nations agree to deeper oil production cuts as the Strait of Hormuz remains almost at a standstill. For a check on the markets, here's Christine Aquino.
All right, Julie, it is still very much a green kind of day here, at least when you're looking at equity futures. Again, U.S. futures across the board really rallying, extending those gains that we've seen earlier. The S&P 500 futures now up 0.3%. An outperformer is the NASDAQ 100. That's up nearly 0.5%. Again, a reminder, some of those chip stocks, some of those big tech names really bearing the brunt of the sell-off that we've seen over the last couple of weeks. So rallying in a big way today. And of course, Russell futures still very much in the green, 0.3%, as those economy-sensitive stocks also gaining here. Let's take a look at the fixed income space. A little change here at the moment. Maybe yields trending slightly higher here as investors now try to figure out what this means for the fixed income and inflation outlook in particular. Now, let's take a look at energy as well. We've seen crude again climbing back down from that over $100 level. Brent crude now trading at $90 per barrel, 88 cents, down about $8 at the moment here, Julie. So very much a climb down from the moves that we saw on Monday.
Christine Aquino, thank you so much. And for some stocks to watch, here's Obir Abu Omar.
Good morning, Julie. Some pretty tranquil morning this morning compared to what we saw yesterday. But some interesting macro stories when we dig behind the scenes. Now, we've got TSMC, which had earnings today, and it suggests that sales over the first 2 months of the year were up 30%. Now, that's leaving an impact on stocks that depend on hardware. SanDisk is one of them. It's had a whopping increase over 100% since the start of the year. Adding to those gains, we see TSMC pairing some of the gains from earlier. But TSMC is the chip provider for the likes of NVIDIA, AMD, and others. Now, if we flip the board and look at Strategy, it's up 3.3% in the pre-market trade this morning. Now, this is a story where Strategy yesterday bought over $1 billion in Bitcoin. Bitcoin is doing quite well since the start of the war in Iran. And speaking of the war in Iran, we turn to some big oil companies. We flip the board and we look at the likes of Chevron, Exxon. They were among the best performers in the S&P 500 yesterday. Today, not so much, pairing some of those gains from earlier as President Trump's message towards the war in Iran eases some of the pressure on Brent crude prices that are around $90 a barrel now. Julie, back to you.
Thanks, Abir. And joining us now is Wei Li, Global Chief Investment Strategist at BlackRock, alongside Bloomberg's Market Today Managing Editor Christine Aquino. Thank you so much, both of you, for being with us. I want to start with what happened yesterday. President Trump signaled the end of the war. S&P rallied. Oil came down after hitting records. Love to start with your reaction to that.
Thank you for having me. I think the cure for higher oil price is higher oil price, right? But more broadly, I think yesterday we saw again immutable laws in action. Last year, we framed kind of market uncertainty around immutable laws, i.e. things that are so fundamental to workings of economy and markets that they cannot change very quickly in the near term, and they can actually influence outcome. So one such immutable law is supply chain and the fact that it cannot rewire within a short period of time. And the Middle East conflict is not just about energy and oil supply disruption. It's about fertilizers. It's about food prices. My colleagues were flagging to me about the helium prices going higher, a lot higher as well. So that is one immutable law that can govern and shape the outcome. And the other immutable law is debt servicing cost through the feedback loop that is spiking yields. So the takeaway here is really that it's somewhat similar to last April, I would say, which is the uncertainty does not automatically mean risk off. Predicting the blow-by-blow policy announcement is extremely difficult, but appreciating immutable laws governing how economies operate can really help us narrow near-term paths and also around conviction of risk-taking, especially as we have seen again and again that markets have gotten quite used to and really easily influenced by near-term extrapolation.
All right, Wei, I know that one of your views, of course, is underweight long-duration treasuries. I'm sure that view is working out quite well at the moment. But against that context, what do you make of the current environment and the market's outlook on the inflation premium? Is that something that you think is becoming more permanently embedded, or is this something that could still be transitory, as some Federal Reserve officials last week have alluded to?
Well, there are quite a few pieces driving inflation dynamics in the near term and the longer term. In the near term, obviously, the duration of the Middle East conflict would have a significant kind of impact on near-term inflation expectation. But here the key is that even without a prolonged disruption through Middle East, the shock could still be enough to disrupt the low inflation, low interest rate narrative that had been dominant in markets until very recently. So that's definitely something that we're watching for. Over the longer term, I'm paying very close attention to wage dynamics because ultimately, if the average hourly earnings are still kind of topping expectations, growing at 3.5% 3-month annualized pace, which is more consistent with core inflation kind of getting closer to 3 rather than 2, when that is the case, we definitely cannot be complacent about inflation longer term. So all of that actually paints a picture of sharper trade-offs facing the Fed as we head into the next Fed meeting.
Yeah, you just touched on that. Inflation, of course, coupled with the war, it does cast some doubt on whether the Federal Reserve will be able to cut rates and the ECB could actually raise them.
So right now, markets are pricing 1.5 additional cuts for this year. We see no reason to push back against it. Labor market could still give the Fed some cover to keep cuts, but obviously offsetting that is inflation pressure from wage dynamics. So the growing division within the Fed is really a feature of this environment, highlighting the tougher trade-offs facing the Fed on the one hand between inflation, on the other hand between debt sustainability. So we don't see reason to push back against the market pricing about 40 basis points of additional cuts for this year for the Fed and for ECB for that matter, because of the more vulnerability of the European economy to energy shock, right? So if the disruption were to persist into months rather than weeks, which was not our base case, and now looking even less likely. But if that were to happen, we run the scenarios, it would push inflation higher in Europe by almost 1%, and the equivalent in the US is half that, right? So Europe, being more energy reliant, would be more susceptible to that, which is why the market dynamics is diverging a little bit in terms of pricing for the ECB versus the Fed.
All right, Wei, we don't have a lot of time, but, beyond Iran, of course, markets were already dealing with private credit scares, AI scares, and now we have geopolitical conflict. Do you think we're at a tipping point here in terms of risk appetite? Is this something that could fundamentally change the way investors approach risk moving forward?
Well, I would say that what governs our asset allocation and risk appetite is really what I started this interview with, immutable law. So in the near term, headlines can be very volatile and can be really quite scary, but ultimately kind of what could function as a feedback loop is consideration around kind of the consequences of global supply chain needing to rewire very quickly. Can that really happen? And also the consequences of spiking yields, what that do to debt servicing dynamics, and understanding understanding that allow us to keep our risk on view through recent days of market volatility, and we're sticking to it right now. And we don't talk about it as much, but actually the fundamental picture is holding up really quite okay. You look at earnings, the last quarter of earnings, U.S. Markets are surprising to the upside. Tech in particular, they grew earnings year on year close to just shy of 30%. I know market narrative shifted from the immediate kind of quarter to quarter earnings to longer term terminal value. But ultimately, this is an environment where AI transformation creates winners and losers, and market sentiment can drive indiscriminate pressure, and that creates tactical dislocations and opportunities to be active.
Thank you so much for joining us, Wei Li of BlackRock. And now I want to go to the top stories trending on the terminal this morning. The war in Iran hit some of the world's biggest hedge funds. Bolsny, Millennium, and Point72 lost hundreds of millions of dollars last week due to the broad sell-off. Millennium lost $1.5 million. Point72 lost 1.1. A top Pentagon official sees little chance of reviving the Anthropic AI deal. Defense Secretary Emil Michael told Bloomberg that Anthropic's lawsuit challenging the government's decision to declare the company a supply chain risk was a, quote, expected reaction, but it wouldn't alter the Pentagon's decision. A quarter of Apple's iPhones are now made in India. It increased iPhone production in the country by about 53% last year to get around U.S. tariffs on Chinese imports. India has offered subsidies to help offset cost disadvantages faced by manufacturers. This is Bloomberg. This is Bloomberg Brief. You're looking live at the principal room. Coming up, CBOE CEO Craig Donoghue. That's on Bloomberg Crypto at noon in New York, 4 p.m. in London.
On Iran, you called it an excursion. You said it would be over soon. Are you thinking this week it will be over?
No,
Are you talking
but soon.
about days?
I think soon.
Okay, and with respect
Very soon. Look, everything they have is gone, including their leadership. In fact, there are two levels of leadership, and even actually, as it turns out, more than that. But two levels of leadership are gone.
President Trump hinting that the U.S. and Israel were making significant progress in the war on Iran. Joining us now from Washington is Mika Solner of Bloomberg Government. Hey, Mika, what measures is the administration considering right now?
Yeah, so White House officials are weighing their options in terms of how they can bring down the price at the pump. One of the options that they're looking at is potentially a pause on the federal tax on gas. Now, that would require congressional approval, and it actually did not work under President Biden, who did attempt that same effort to bring down gas prices a few years ago. But another option the administration is looking at is potentially tapping into emergency reserves that the U.S. has that was created in the 70s. Now, that comes with its setbacks as well, as it can potentially tap into infrastructure funds, although it would bring down the gas prices for consumers.
And President Trump weighing several options to tame those surging gas prices. Can you go into that?
Yes, as I laid out, I think these are the two main options that the White House is looking at. But the pause on the gas tax, or potentially looking into the emergency reserves and distributing it that way. But the president is very aware that this is an issue for him. The White House officials have seen the polling when it comes to the strikes on Iran, and that they remain unpopular with the public. So they're making sure that there is no long-term effect about gas prices so close to the midterms at this point, even though it's still months away. I think people are going to feel that in their pocketbooks, and while they try to make affordability a number one issue.
And some Senate Democrats threatening to stall in the Senate until the president's team explains the war.
Yeah, there's a handful of Senate Democrats who have threatened to basically kind of hold the chamber at a standstill until there's more transparency from the administration. A lot of the briefings from officials, including Secretary of State Marco Rubio, have been behind closed doors. That has been a complaint from Senate Democrats, even some Republicans who say that they want these open door hearings and more answers in terms of what are the administration's goals, what are the clear objectives, but most importantly, I think, what is the timeline for their efforts in Iran? So I think that, that's one way that Democrats in the minority can kind of utilize the power that they have to try and put pressure on the administration.
Thanks to Mika Solner of Bloomberg Government. And oil prices drop as Gulf countries deepen output cuts, shaping about 6% of global supply. The Strait of Hormuz remains at a near standstill. Bloomberg EMEA News Director Will Kennedy joins us now. Will, this has been a very difficult few days. However, there was some rebound yesterday as the president tries to decide what happens next.
That's right. Oil had an extraordinarily volatile day yesterday, one of the most volatile day in the market's history, a record fall from the intraday high to the closing price yesterday, all the way up to almost 120 and all the way back down to 92. The market took a lot of solace from the president's comments because if this war ends soon, the market will be able to begin the process of getting back to normal, getting that oil out of the Strait of Hormuz. But today we've had an illustration of the fact until that happens, the problems in the oil industry will mount, as you're showing there. The output cuts that this situation is forcing on the big Gulf oil producers because they have nowhere to store the oil that they're producing are increasing. And at the same time, we had the Aramco CEO, Amin Nasser, talk during their company's earnings presentation and say that if this continues, it risks a catastrophe for the Middle East oil industry. So the stakes remain very high. At the moment, the market is taking the president at his word that it will end soon. But if that slips, if it continues, the problems will come back into focus for traders.
President Trump, of course, also floating waiving some oil-related sanctions. So what kind of impact are you thinking here?
Well, the two countries that are under sanctions are Russia and Iran itself. In terms of Russia, we've already seen some relief, which has allowed India to buy Russian oil without sanction. They had been a big buyer that had to walk back under the pressure of sanctions. Buying Russian oil again allows them to replace some of the oil that's been lost, and there's lots of Russian oil on ships. So that is one safety valve for the market, which is helping to relieve the worst of the pressure. And it may be down the line, if the war is settled, if the president finds a way to talk to the regime in Iran, that he would like to see oil sanctions lifted on Iran, but that's some way off. But he's clearly had in his mind throughout this some similar situation to Venezuela, where they replaced the leadership and they took control of Venezuelan oil. But again, that's a long way off. So it's important, but I think it's marginal to alleviating the current problems in the oil market.
Thank you, Bloomberg EMEA News Director Will Kennedy. I want to turn to tech now. U.S. shares of TSMC rising in pre-market after posting a sales growth of 30% on continued global demand for AI hardware. For more, let's bring in Bloomberg's Neil Campling. Neil, take us through those results.
Yeah, so if we look at January and February combined, you had 30% growth year on year, which is moving towards where the street are at for the first quarter, where analysts expect 33% growth in Q1. Basically, February was lower than January's growth, but that's all affected by the timing of the Chinese New Year. But clearly that taken with the numbers and also with other anecdotes, such as NVIDIA's recent guidance and HP Enterprise's revenue growth last night as well, there's clearly continued spending on AI driving those results, which is another positive in terms of the tech AI hardware trade.
Oracle earnings on deck after the market close. What are we expecting?
I think one of the main things we're expecting is volatility around the results. Expectations are for a 10% swing on earnings, either negative or positive, and I think very much is a case of what will they say again about that AI capex. I think personally it's probably too early to get a read on the longer term outlook because it's not their fiscal year end. That will come after May's results. But clearly with the equity down 50%, from where they were in September, and the cost of their debt in terms of CDS spreads going up significantly in recent months. There's going to be focus on free cash flow, which has been negative, and the levered balance sheet, which sits in contrast with other big cap tech stocks. So that outlook in terms of the spending and relative to where the growth rates can be, which is lower than many of the big cap peers, they're going to be sort of certainly watches for the numbers and the tone on the conference call and analyst questions.
Thank you very much, Bloomberg's Neil Campling this morning. And coming up, we'll get you set for your trading day with economic data and earnings on deck. This is Bloomberg.
It's obviously concerning for our partners in the region, or our customers and their families. In terms of business, I must say so far the effects are limited. In terms of energy supply of gas and oil, we normally work with long-term contracts, so the effect is limited there. And so far we also see no major supply constraints.
Now a look at what's ahead today. First up, ADP weekly unemployment numbers are out at 8:15 a.m. New York time. Then Treasury will auction $58 billion of 3-year notes at noon, and Oracle earnings come out after the market close. We'll have a market check here shortly. Let's start right now. We're seeing the intraday is up. S&P futures are up again. NASDAQ 100 futures are up. Intraday Russell 2000 futures are up 8.60, which is good news after what we saw yesterday. The 2-year yield is up. The 2-year yield is down. The 10-year yield is up, and the U.S. 30-year yield is up, which is making much better after what we saw with everything with oil yesterday, and everything seems to be coming back slightly today. Take a look at crude and Brent crude and the U.S. dollar responding from yesterday. Oil again was up over $100. Now it's under 90. So we're seeing these numbers improve slightly after everything that we saw. That's it for the Bloomberg Brief. Surveillance is ahead. This is Bloomberg.